Hello traders, Nick Shaheen here revisiting Nikola. NKLA is the ticker. So I won't be arguing whether it's a good company or not. That's up to you. It's individual opinion. So let's work with facts. And the only facts that I have that are absolute are the actual history of the stock price. And I will use that to try to make an opinion on what's coming next. So I think the last time I did a video on this one was 318. Let's point it out right here. I did a video. I said, I guarantee you a fight coming and a move, drastic move. The bulls and the bears. My words were kind of like they're going to face each other in the fight, in the eyes, and say, let's do it, because the range went from this wide, coming into a point at a prior important level. So I said, literally, I don't want to find out what's below this line. That's why I would stop out from a trading perspective if it goes below that. And had somebody done that, they would have saved 35% of their money, because that's what happened. The bulls prevailed, the bears failed, and triggered the bearish pattern. That is currently still unfolding. More on that in a little bit. But this line, I didn't pick it out of the blue. It's been in contention for a while, and it was the start of the whole thing. So it only makes sense that it matters on the way down. And I said, literally, it could be just a shallow drop, but I don't want to find out how deep they go. And technically, they could go a lot deeper than 8, but they stopped at 8. But I'll tell you something. If the market's correct, you think 8 will hold? I doubt it. So I'm not calling for lower than 8 prices. I'm just telling you how the process happens. So the machines now refused to hold that level, and that level becomes the problem on the way up, because they will remember the level and they will exit at that level. So the bulls' job, which they started to do, let's zoom in for better information, stop the bleeding, meaning stop making lower lows. They tried here and failed. They tried here and failed. The difference here is they have a slightly higher low on May 6th than late April, whatever, the 22nd was that. So higher lows, arguably. Let's call it no lower lows. Step 1. So now step 2 is tackle the problems on the way up. Now I mentioned this line right here first, which is 14. I'm going to use 14 as a round number for it. But there's one slightly below it, which was from recent action and from last week. Is this a daily? Yeah. So last week, and now we're inching above it. So into 14, they're going to find sellers. I can almost guarantee you that. This is where the bulls have to earn their keep. Can they take it back? And I don't mean like Hyliion did, whoop, one poke and then it gives it all back up. Take it back normal fashion, not like 16 million% in one day, and just inch up above it. Use it as solidified support so you can build on it like normal stock price action happens. These quick jaunts make for very weak hands, because if I'm the one that caught a 100% rally or a 50% rally, I'll hit the stop button right away on the first red tick. I was like, I don't want to find out. Let's go. Thank you. So they're not strong hands. So you build a strong base by inching forward and beating contentious spots. 14 is one, 15 is one, but 14 really was the one that put the nail. It's actually a little bit less, but let's use 14 for building a buffer zone. So what happens if it makes a lower low? That means the selling continues. So now if you look at it, just look at it, the statement is who's in control of this price action, regardless of what the stock ticker is. The sellers are in control. They've succeeded in setting lower highs and lower lows for months. So there's no doubt about it. At the daily chart, that's the case. If I zoom in, I can probably make the argument otherwise. On the 15-minute chart, there's a short term, like a few days, the buyers are in control. What if I zoom out to 60 minutes? Oop, it's a draw. The action went from here to here, and now they're back halfway. So have you heard of Fibonacci 50%? So now they're going to start facing, there's that 14 level again. So you come to it from a different perspective. 120 chart, the buyers are not in control. The bears are in control, the sellers. So perception. So know how fast you're trading to look at what chart information to use. But the statement is consistent. Long term, it's still an iffy proposition from a stock chart perspective. Now, the lovers of the stock will tell you that truck is coming. The haters of it tell you it's a whole bunch of fake stuff. So I'm somewhere in the middle. When I first saw the guy on TV, he rubbed me the wrong way. I thought, what? This guy sounds more proud of his NASDAQ ticker than his actual pickup and his company logo. So, and then I said, you know what? Everybody's giving him credit. Maybe he is legit. So I changed my mind. I traded it positively a few times. I took a few longs. The last long I took was I sold a put. The stock fell, but not deep enough to hurt me, and the put played out in my favor. When you sell a put, it's a bullish trade. And if price doesn't pierce it, then you make money. But in my case, price fell towards it, but not through it. So that was my last win. I was like, I don't need this. But I'm still helping friends that actually trade the stock for whatever reason. So from an investment perspective, you either love it and believe in it and you take a blind shot at it or not. That's easy. If you're actually trying to trade the price action, I just gave you the map for it that I believe is likely to unfold. Now the machines here, from here on into 14 and 15, they would be looking for exit opportunities. You're saying, what the fudge machines are we talking about? Well, do homework. I don't know the exact percentage. I'm not from Wall Street, but every article I read, either 80 or 90% of all trading is done by actual machines, not humans like you and me. We're like tiny little drops in the whole bucket. We're not moving the price. We're just trying to play along. So if we don't think like the machines, we're one step behind. There's no logic to this. There's just code looking at price action, looking at levels that mattered before, and making a decision on the fly. They look at levels first, and then who's in control. And then they act accordingly. Do they buy this pop or do they sell it? That's how they decide. That's how you get trend days. All right, Nick signing out. Oh, if you like this stuff, we do this all day. And first, subscribe to this channel is free. Or join, even better, join the chat room. There's a link down below. And it's free to try out. It's not free to be there because it's a lot of work on my part. So we have almost 300 people of all different styles, and the link will take you to a PayPal transaction, which is actually $0. This is just a qualifier that somebody's serious enough and not a troll looking to cause ruckus. All right, that's it. Nick signing out here.